Thank you, as always, for giving us a little bit of your busy day. Madame Lagarde, since the ECB's last policy meeting, many euro area countries have extended or even tightened lockdowns. Vaccinations are only making small progress. Is there a point when ever longer restrictions will actually harm the euro area's ability to recover because businesses will just give up?
Well, good morning, Francine. It's very nice talking to you. And I would observe that we have an economic situation overall, which in this part of the world, Europe, is really marked by uncertainty. And in that general macroeconomic situation that is marked by uncertainty, what monetary policy has to do and what the ECB has to do is to provide as much certainty as possible. And this is really the aim of the most recent monetary policy decisions we have taken. Clearly, in the scope of our mandate, which is price stability, but I think that in the very exceptional circumstances that we are encountering, providing a degree of certainty is the best that we can do at the moment.
Given the lockdowns and what's going on with vaccines in Europe, Madame Lagarde, has the balance of risk actually shifted since the last policy meeting?
Well, our balance of risk is still tilted to the downside in the short term, because we are seeing a degree of uncertainty. We are seeing renewed lockdowns. We are seeing a vaccination rollout that is short of what we had expected. But it is much more balanced in the medium term, and we expect the vaccination rollout to proceed. We expect sufficient herd immunity to be reached at a point in time in the future, and that leads us to have rebalanced a bit our assessment of risks in the medium term. So still downward in the short term and more balanced in the medium term.
So is it fair to assume then that you'll be able to scale back some of the purchase program in June, given what you just said about the economy and the fact that actually medium term it could get better?
I think my definition of the medium term is a bit different from the one you are mentioning. Medium term for us is a couple of years, and it actually fits with the hope for recovery. In other words, the return to pre-COVID-19 situation, which we estimate at probably mid-2022. What we have decided most recently is to significantly increase our pace of purchase. And this is a decision that we have made in view of the circumstances and with a view to preserving favorable financing conditions. We will reassess in due course on a quarterly basis and in between as well, of course, to make sure that our monetary policy is in line with our overall price stability objective, but also with the aim that we have of preserving favorable financing conditions, which, as I said, leads to more certainty, improves the confidence, hopefully induces consumers to consume and investors to invest. And this is what we are beginning to see, actually.
But, Madam President, the ECB bought an average of 20 billion euros under its pandemic program over the past 2 years. Is that what investors can also expect in the weeks ahead?
As I said, we're not guided by a fixed amount. We're guided by a very determined objective, which is preserving favorable financing conditions. When we looked at the whole situation, this is what I have identified as a holistic assessment. I know that people find this word very funny, but it's deliberately intended to cover the entire financing conditions available on the markets. And when we looked at those conditions a few weeks back, we observed that there was unnecessary, unwarranted, and premature tightening of those conditions, which led us to determine that we had to significantly increase our pace of purchase. We are very attentive to these financing conditions, from upstream to downstream, meaning that we look at the risk-free interest rates, we look at all the sovereign bond yields, we look at the credit terms that are available for consumers, for investors, for corporates. And then we determine on that basis whether we should adjust one way or the other. Because don't forget, given the exceptional situation that we are facing, we are using maximum flexibility when we deploy PEPP. We will deploy all of it or not, or more. And we will certainly adjust as needed, depending on these financing conditions that we monitor and that we evaluate very carefully.
But as the economy recovers, bond yields will rise. How will you determine what's warranted and what's not warranted? How difficult is it to determine?
What we observe at the moment is yields that have increased quite significantly and quite rapidly. And this is what has guided our most recent monetary policy decisions. The next worry when yields rise because the economy is picking up, because consumers are consuming, because investors are investing, and because hopefully there will be a bit of price pressure exercised on our economy, then we will assess what is needed. But let me tell you this, given the distance relative to the aim that we have, which is inflation, I think that it's going to be quite a while before we actually have to ask ourselves whether we need to tighten at all.
What's quite a while? A couple of months, or could it be longer?
That is something that will be determined by our observations of facts, of prices, of indicators, and we are not going to be guided by the short-term movement, because we know that in the short term, inflation is going to rise. There are some technical, temporary factors that are going to lead to upward price pressures. That is going to be caused by multiple elements, whether it's the German VAT increase, whether it's the rebalancing of weight in the inflation assessment basket. But we're going to see through that, because those are not sort of underlying fundamental factors that will increase prices in a consistent and convergent fashion. So this will be guided by observation of sustainable, solid movements, and by our aim, which is price stability as defined, and our commitment to economic players that we will preserve favorable financing conditions.
Mario Draghi never got to hike rates. Could you imagine being in the same position?
We shall see. Future will tell, as the song would go. I would certainly hope that the economy is going to pick up, that there will be a turnaround in the months to come, and that we will be able to resume our sort of less exceptional monetary policy going forward. But I'm not seeing any kind of raise in the near future, for sure.
Madame Lagarde, what are markets exactly playing at the moment? They seem to be continuing testing central banks. Like, how steep of a yield curve is it okay?
They can test us as much as they want. We have a mandate, we have an aim. We're going to be riveted to that, and we're going to do what is required in order to deliver on that. And we have exceptional circumstances to deal with at the moment. And we have exceptional tools to use at the moment, and a battery of those. And we will use them as and when needed in order to, as I said, deliver on our mandate and deliver on our pledge to the economy.
Are you worried that the U.S. is going at a different pace to Europe because of the stimulus? So we're expecting also the infrastructure plan of Joe Biden today. What are the consequences of the U.S. outspending Europe?
Well, we are clearly seeing the deployment of a massive fiscal tool, which is going to both imply a very increased short-term demand, but also, if that plan is confirmed, voted, and delivered upon in the next few years, a strong transformation of the U.S. economy. And that is clearly a good mix between this strong fiscal base and the monetary policy that is also delivered by the Fed. And it is going to have domestic impact and also some spillover impact to other economies in the world. And it will certainly increase the external demand that is addressed to the euro area, given the massive stimulus that is now on its way.
Madame Lagarde, have you spent any time yet thinking about how to transition out of emergency stimulus into more conventional policy?
Well, we are conducting an exercise which is really putting our staff under very strong pressure when they also deliver beautifully on the day-to-day exceptional requirements under the circumstances. And that huge exercise is the strategy review that we are conducting of our monetary policy, which ranges from measurement of inflation to actual perfect definition of what we mean by price stability, to how we aim to attain it, and everything in between, including what are the ingredients that actually feed price stability, and by that I mean probably climate change. So that exercise, which is conducted now, which is a little more than halfway through, will be concluded in the second half of 21, probably in the fall. And that would be an interesting time actually to assess what new tools we will need to use going forward, should be available to us going forward. And don't quiz me on that, because I will not tell you anything, as this is very much in progress, underway, and in discussion. But this is not to say that we are looking at exiting at the moment from this exceptional instrument that is PEPP. PEPP, as you know, has been extended back in December, will continue to roll out until March 22, or later, if determined by the Governing Council, because we would still be dealing with the pandemic crisis and its economic fallout. So it's not as if it was, set in stone that it stops right there. This is our estimate of when hopefully the pandemic will be finished and its economic consequences will be over. But again, we are guided by facts, by our assessment of the situation.
In terms of timeline, how much of a heads up will markets need to make sure that you can exit some of the stimulus programs safely?
We will give sufficient early notice in order to avoid the anxiety, the tantrum, or any of those movements that have been observed in the past. But for the moment, we're certainly convinced that it's a combination of accommodative fiscal and monetary policy that is needed. And I'm putting an emphasis on fiscal, because it is clear that under the circumstances, the fiscal arm has to continue to be potent and efficient, which is why we look forward to the rolling out of Next Gen EU in short order, so that we can see that fiscal arm actually fully deployed throughout Europe.
But, Madame Lagarde, what's the cost of delays from Brussels? The progress on the recovery fund seems to be slow. We very much hope that it will be deployed in the second half of 21. When exactly it will begin is for member states to determine, because it is for them now to ratify the instrument and to make sure that they recovery and resilience plans are all filed and fully documented and approved, which I think, by the way, the latter part is really under good progress. On the ratification process, as you know, there has been a challenge by way of injunction by the German Supreme Court, which I hope will be dealt with in short order. Yeah. So that we have certainty as to what the outcome is. And I don't want to prejudge what the outcome, but I certainly hope that there is a way to deliver on what was agreed back in July and has been actually voted already by many parliaments. Now, we've all been following the unwinding trades linked to Archegos. Is this about shadow banking? Should these activities be regulated? Is there a fallout, actually? Could there be more Archegos out there?
Well, I try not to use the word shadow banking anymore, because it sounds so ghostly and unreal. And actually, when we see developments like that, it is actually quite real. So I would rather call it the non-banking sector, which is clearly providing financing, which has counterparties, which is linked to the banking sector as well. You know me, Francine, I've always been of the view that the non-banking sector should be properly supervised, should be duly regulated, in particular, if it exposes institutions like banks to possible major instability circumstances. I don't think that we are in that at the moment, but it certainly yet again shows that non-banking sector should be supervised and regulated. And I'm also of the view, as you know, that it's not so much a matter of the status of the institution, the category in which it falls, than the activity that it conducts and the risk to which it exposes others. You know, that somebody who takes risks, takes losses for itself is one thing, but risking in another environment, in counterparties, that is something that needs to be properly regulated and supervised. And I'm very pleased that the authorities in charge of supervision are looking into the matter in the United States.
But some would argue that not much has actually changed since the financial crisis of 2008, that greed still thrives. Would you agree with that?
You know, you don't change human nature. That is a fact. And I think that people in many instances are still guided by fear or greed or a few other things that will go unmentioned on this occasion. But I would disagree with you that things have not changed. Greed has not changed. It's there. What has changed is the environment, the framework within which players play their games. And I think that in that respect, the banking sector is far more regulated and supervised, is certainly a lot stronger than it was 10 years ago when you and I were involved in the great financial crisis. And, you know, we certainly hear from banks that they feel sometimes over-regulated, over-capitalized, subject to too many, you know, buffers and compliance requirements, until such time when they realize that it's actually of benefit to them, and it provides a security offer to their customers and to the business that they conduct. So I think that has certainly significantly changed compared to 10 years ago. What has changed as well is that quite a bit of the activity that was traditionally conducted by banks has moved to the fringes of the financial sector. And I think that that's the reason why the FSB is conducting the work it does in the non-banking sector to see, you know, what regulations, what supervision should be developed in order to provide security to those who need the security.
Madame Lagarde, I also want to touch on climate change. So the BOE actually received an official climate mandate this month. Would you like the ECB to get one as well?
I think we have a broad enough and sufficiently well-articulated mandate that we can take actually climate change into account in our activity. Let me go through that very briefly. We have a primary mandate, which is price stability. And then we have secondary objectives that are all linked to the economic policies that are developed by the European member states and the European Council and the European Commission in order to serve the European people. I think under both primary and secondary objectives, climate change is an important matter, an important factor that needs to be taken into account when we assess price stability and whether we reach it and deliver it to European citizens. And it is clearly part of our secondary objective, because when you look at the European economic policy, the fight against climate change consequences, green policies are all over the map, from the assessment, from public opinion to the European Commission, Next Gen, 2 pillars, green and digital, and the determination of all member states at the European Council and the European Parliament on the top of it, that is very active and really means to deliver not just general intentions, but also very clear articulated objectives, as well as the tools to get there. I think taxonomy is one of those. So whether it's primary or secondary objectives, climate change is one of the key factors that we have to take into account to measure how we reach our goal. If you take one example into account, if you look at the disasters that have been caused by natural hazards, which have been clearly accentuated by climate change, I don't think very few people would debate and argue about that. You're talking only in 2020 of about 210 billion US dollars that have been just spent and that have cost in relation to those events. You know, it's a given that it impacts on our economies, that it impacts on our price, the price that determines our stability, price stability objectives. Yeah.
No one really argues with that anymore, but I guess proposals of what the ECB should do range from tilting corporate bond purchases to changing collateral rules to actually offering green loans to banks. So how far can the ECB go? What's realistic right now?
First of all, it's one big component of our strategy review. And, you know, when the exercise is completed, we will be able to identify how the European Central Bank will become a green central bank. Okay? And I think charity begins at home. It means also for our own non-monetary portfolio, moving towards a greener portfolio, a different set of mandate given to our proxy holders and so on and so forth. And this is already underway because we can move ahead, and we have moved ahead very clearly. Also, you know, in the type of bonds that we accept since January 1st, we're now accepting those bonds that are associated with variable coupons that depends on how ESG compatible the results are for those financial instruments. So we're moving ahead, number one. We are including that part and parcel of our strategy review, and we're determined to play the part that we should play because climate change does impact our primary objective and our secondary objectives. Will it be how we factor in externalities in the assessment of the value that we conduct of our instruments, of the instruments that we purchase, or the instruments that we take as collateral? How quickly that will happen is something that will be delivered as part of our strategy review.
Madame Lagarde, on digital currencies, so the ECB is looking into it. You've left little doubt that you're a fan. Is not developing a digital euro even an option?
Okay, I step aside from my own conviction because I'm the president of the European Central Bank. There is a governing council that brings together all the national central bank governors as well as members of the executive board. And the decision as to whether or not we will move with the digital euro will be taken by that organ, the governing council. It will so decide. And that will be mid-21. Okay, so in terms of what are the deliverables now, we will soon be releasing the analysis of the 8,000 responses that we got from the consultation process. That will be communicated to the European Parliament, which is one of the key players, as well as the Commission and the Council with which we operate, not to mention the Eurogroup. Then after that, mid-21, the Governing Council, on the basis of that consultation and the preliminary work that we're doing, will decide whether we go ahead with experimenting. And then there will be a second decision, probably, you know, a year from, I don't know whether it will be a 6 months first assessment or 1 year assessment, whether we actually are going to roll out. But the whole process, let's you know, not be, let's be realistic about it, will, in my view, take another 4 years, maybe a little more, but I would hope that we can keep it within 4 years, because it's a technical endeavor as well as a fundamental change, because we need to make sure that we do it right. Well, we owe it to the Europeans. They need to feel safe and secure. They need to know that they are holding central bank backed. I would say it's the equivalent of a digital banknote, with the same level of security, the same level of backing as the central bank. So that needs to be really safe and solid. And we need to make sure that we are not going to break any system, but to enhance the system. And I'm saying that on purpose because I know that certain intermediaries that we are using at the moment that are relying on us as well, I mean by that the banks, are a bit concerned about those developments. I don't think they should be concerned because a central bank is not going to invent itself as a client manager, as a risk assessor for the granting of credit lines. So those intermediaries will continue to coexist and to develop their business and to conduct their activity with cash, which will also continue to be available, as well as digital currency. But in my mind, if you just observe how people have behaved during COVID-19, the way in which they've changed the way they buy, the way they order, the way they get their food, the way they pay, it is moving in a digital dimension, which we should not be afraid of, and which should provide, as I said, safe, solid, and secure payment mechanism to Europeans and others.
Christine Lagarde, the Bahamas actually launched the first ever CBDC
the
3 months
$100.
ago. What have we learned from that, and what other experiments are you looking at?
I think it's, to my knowledge, the $100 of the Bahamas is the only one that has been effectively launched. There are a few others that are in the making, and clearly the PBOC, the Central Bank of China, is conducting stress tests and tests in general in large constituencies in China, which is by all accounts much larger than several Bahamas together. So we'll be also very attentive, and we'll try to learn from those experiments. I don't have enough return from the Bahamas experiment. I know that the IMF has done a little bit of review and assessment, and will publish, I'm sure, about that, which I will take great interest in reading.